we're in conversation with Mr. Jairam Sampath, whole-time director and CFO of Kaynes Technologies, to talk more about the results as well as what is the outlook for FY26. Mr. Sampath, good morning. Thanks so much for giving us your time today at NDTV Profit. Let me start off first, directly with the results. We've seen Q4 was expected to be strong to meet the guidance as well. Slight miss on revenue, but overall the EBITDA margin profile has been very strong. I just wanted to start off first with the segmental performance. The industrial business basically is now 55%, up from 48% in terms of revenue. Within that, if you can just talk us through and break us the products. I know smart meters is one of them, and you gave a few in the presentation, but just if you can talk us through what's the growth of this expected next year, and is it largely led by smart meters or some other products that we should know about?
Thank you for having me here. So fundamentally, the order book contains a lot of new value accretive orders in the industrial, electronic vehicle, aerospace and outer space, and also even IT and other areas. So of course, last year the performance was shored up by industrial field, which is basically smart meters. But this year we have quite a bit of orders in the automotive area also. There's a European customer that we have added. In the industrial, of course, our key customer who we acquired actually is Trameco, that continues. And of course, there are orders from new EV two-wheeler makers and also from the aerospace and defense, those kinds of areas. Even in railway, I think in FY26 we'll start doing some business in the Kavach area. Our product is almost near completion of development phase. So for the coming year, just want to clarify, we will grow our existing businesses, which is basically the ESDM businesses at about 60%. So that comes to about 4350. Plus we have acquired a new company in North America, which is August Electronics, and I think we'll be able to probably consolidate 6 months of their revenue into our business, and that will be somewhere around 175 crores or so. So if you take a consolidated company level basis, I think our business will be about 4525 or so. And looking at the order book and the kind of business that we have planned for execution, I think our margin will also expand this year in FY26 from 15.1% to about 15.6% at the minimum. So this is on the back of very strong order booking also. As you know, the monthly order rate has also gone up 20% on a quarterly basis, which represents about 80% on an annual basis. And the order book stands at about 6,500, 6,600 crores or so. And that's doing pretty well. Also, I think going forward, there are other orders also lined up in various sectors. And so for FY26, 27 and 28, you can see some fairly good revenue trajectory now.
All right, Mr. Sampath, you highlighted quite a few points there. So for next year, estimating revenue to be around 4,300 odd crores. It was roughly between 27 and 2,800 crores. That was what you said. You mentioned also on the EBITDA margin guidance, 50 basis point increase to 15.6% for FY26. So we got that as well. And order book, just had a follow-up question. You mentioned that you already are at 6,600 odd crores in terms of order book as of FY25. For the next year, how much of it is actually executable over the next year? Because you also have some order book that goes over 5 years as well. So when you mentioned that 60% of your revenue growth for the traditional business, do you already have the orders for that? And is that largely led by the industrial segment, or is that from automotives as well?
Yeah, so as far as the FY26 plan is concerned, we have, it will be led by industrial, electric vehicles, aerospace, and also railways. So aerospace and railways, of course, are better businesses for us because they are high-tech businesses and so on. And industrial, of course, revenues will continue to increase in the area of smart meters. As far as the guidance is concerned, what I said is 4350 is the number that we will have for existing clutch of businesses. We have acquired another company called August Electronics. So that will add another 175 crores, but that's half-year business for them. So you would have a total number of about 4525. as the number. And the new business that we have acquired is at a accretive nature in terms of EBITDA. So EBITDA also, I think you can see some a good let's say increase. About 50 basis points is what we expect. We will see how much actually we get to.
And just want to take the point forward for a new the PLI component scheme that's been announced as well. Any kind of number that you can quote us, because we've already seen a few of your peers already announce capex for the under this new scheme. Could you quantify what's your plan under the new electronic component scheme? I think it's a 22,000 crore scheme. What is the plan for Kaynes Tech regarding the same?
Yeah, so our two investments into PC board as well as OSAT were already covered by the earlier schemes of Indian Semiconductor Mission as well as the earlier SPECS 2.0 scheme. And we will try and see whether we can get some PLI done for the PC board, which is a component which is covered under the new scheme. As far as this round of investments is concerned, we already are covered, well covered in terms of the capital subsidy. In case of OSAT, we get about 70% capital subsidy, state and central government included in the for the eligible capex. And similarly for PC board, we get about 65%, state government and central government included. So this year, we are looking at making sure that these two businesses come on stream and we start commercial revenues from the fourth quarter of FY26. Factory is under construction, so maybe between before September, I think the physical infrastructure will be ready, and then we need to give some 3 to 4 months time for the customers to approve the factories and samples, etc. So at this point in time, we are depending on approvals already received. So there are no pending approvals required. Maybe in future we will look at any expansion under those schemes.
And Mr. Sampath, specifically, we asked you about the order book specifically. You already have the orders for the growth guidance that you're giving for FY26, because it's quite executable over a longer term as well. But for FY26 to meet this 4,300 crores from traditional business, those orders are already with you at this point of time.
Yeah, so typically out of 6,500, close to about 60% of orders pertain to the coming 12 months. So obviously there is a few orders that yet to come in, because some customers do give in orders only for less than 12 months coverage. So from that perspective, whatever is expected to be there with us is already there, probably beyond that. And so you can say that order book coverage is pretty much good.
You mentioned in one of our previous conversations that both, and you confirm right now that the OSAT, which is part of the semiconductor venture, as well as the PCBs, FY27 will be majorly the first full year of operations. So essentially, what kind of revenue can we expect from both these verticals? I think a longer term target is 8,000 crores for FY28 for you. Can we expect that the incremental business will slightly slower in terms of growth? How do we expect the traditional business and the contribution from these new verticals?
Sure, sir. So FY28, we had always talked about $1 billion, which has been our objective. So we think that dollar will be about 90 rupees, so 9,000 crores. And in that, the FY28, the contribution of OSAT and PCB was supposed to be about 1,500 crores. And the remaining 7,500 crores was supposed to come from the EMS kind of business, which I think we are pretty much on stream, and maybe we'll exceed those numbers. So as far as FY27 is concerned, we probably will do enough to make sure that at least minimum 1,500 crores of businesses will happen in FY28, maybe more. So FY27, we might reach the same, say about 1,000 plus 500 crores in these two businesses in FY27 itself. Because FY26 is the evaluation time, and FY27 we see significant capacity utilization also, maybe between starting with about 30-40% and going up to about 80%. So let's broadly we say that half of the turnover that we expect from these businesses should start kicking in by second half. So roughly 1,000 plus 500 crores is what we can expect from new businesses, that is OSAT as well as PC board in FY27. FY28 maybe will exceed that 1,500 crores that we had reckoned earlier on. So we will come out with fresh calculations probably towards the end of the year, after looking at all the orders and all the customers that have been onboarded.
Yeah, because you already mentioned 1,500 crores from these new verticals. You already are doing 4,500 in your traditional business. So you're already there between 6 to 6,500 crores at the start of essentially FY27 for both businesses. Got the view. One final question. There's a couple of questions combining them. So one is the IoT, IT, as well as the consumer side of the business that's still new for you, roughly between high single digit in terms of revenue. That is very close to the traditional EMS business, which a lot of companies do, which is high volume and low margin. Is that something different for you because you have focused more on high margin and low volume products? What is your outlook for this vertical going forward, and exports as well? That's roughly 10% of your revenue. Is the strategy more for export from India to geographies as well, or from, like, as you acquired August Electronics in Canada, so you will be addressing those markets from those acquisitions, and Sensonic as well in Europe? So any just a color, some color on that as well as my
No,
final
no, sure.
question.
So firstly, our IT, IoT, and others contains only professional electronics, which is business to business kind of thing. It contains most of these are high performance computing servers actually. So what you see there is not consumer, though we include consumers there, but consumer is almost minuscule, almost negligible portion of our business. Earlier on, we used to do some little bit of business in terms of ODM business, that is BLDC controllers and so on and so forth, which did have some consumer outlook. As far as the exports is concerned, exports is distinct from geography sales. So we are talking about India geography. India geography contains domestic and exports. So India geography exports would contain aerospace and some business in automotive and some business electric vehicles. And maybe at a later point in time, some railway business will also resurrect. So from that perspective, we expect the India geography exports to increase from current small single digit number to a much at least a double digit number by the coming year. In addition to that, new businesses like OSAT and PC board will have almost a major portion of their business will be exports. And in addition to that, of course, there is these acquisitions outside of India. So that is called a geography. In our parlance, that's a geography business. That means you sit there and do business locally. So that may not be very significant in FY26, but then coming by FY28, 29, we would like to have geography, outside geography business to be close to about, say, FY29, FY30 time frame, $300 to $500 million should come from outside of India geography. And then, of course, you will have $1.5 billion from India geography. So that's what will make this FY30 $2 billion mark.
Got that, Mr. Sampath. Thanks so much for joining in, giving us the whole host of views on FY25 as well as what's the outlook for the next few years. We look forward to our next conversation, but thank you so much for joining in today, sir.
Thank you. Thank you for having me.